Hello, everyone, and welcome back into Crypto's News. It's me, Omar Bam. I welcome you. So yeah, Friday is just continuing to roll out, and there is quite a lot that's been going on. We'll be covering prices continue to look good, as you can see for cryptocurrencies here. We're going to dive into that and some other news as we close out the week. Thanks so much for the support. Go ahead and hit the like button if you like the crypto content. Hit the subscribe if you're new to the show and you would like more of it. Don't forget to hit the bell icon so you can join the fun live streams and share the content, share the love as I try to do with y'all and presents any sorts of opportunities that exist. Let's go ahead. Oh, and thank you guys so much for the feedback and the suggestions. Like, there was one person who was suggesting I speak more about privacy coins. As news comes out for anything relevant to that, I will try to keep a lookout. And if you do see something that's important, feel free to send me a message. For example, on Twitter, I have that link down below with what you find fascinating. I find it really difficult to cover every single project. I'm just a one-man team here, as you can imagine. And I do rely on the community, especially on Twitter, where I currently have the biggest following, to help let me know what is relevant with some of the bigger projects, because I just might miss something. The algorithm might not feed it to me, and it is more controlled days, let's call it, of the content. So it does help a big amount. But let's go ahead and start looking. So we got Ethereum up 2.7% at, wow, 1559. What do you know? I like that price, up 2.7%. Bitcoin 1.4% at $20,647. Market caps overall for crypto still over $1 trillion. I know doesn't look like it's that high right now, but suddenly Cardano has picked up as well. It's up at 4.3%. Dogecoin, I think it like tripled in price from last week. It's up 7.2%, still continuing its run. Still a lot of excitement, I think, from folks who are looking to invest in the next Ethereum. Avalanche up 7.2%. That is the big winner here right now. Oh, that's the one that picked up, not necessarily Cardano, yeah. And Cosmos Atom, another one that's really come into the spotlight as a cross-blockchain communicator platform, right? 7.8%. So there are definitely some opportunities out there that do seem to be springing up, at least when it comes to trading so far. We don't know yet, as it says here on a Cointelegraph article, whether we have officially carved some sort of bottom for Bitcoin. We could be in the process of confirming that, but we really do not know just yet. And we were talking about the miners, the biggest Bitcoin miner yesterday, I believe it was, Core Scientific, and how the price of their stock went down like 70%. Came out that they might not even be able to survive after through the end of the year. And hopefully they do, right? I don't like to see people suffer, employees. I don't like to see stockholders, of course, suffer as well. And maybe it'll be like the situation with natural gas in Europe, which I'm hearing is getting a lot better right now. Prices has hit like $0 actually for that, because reserves were full again over there. So like there were fears that people wouldn't be able to afford energy and would freeze to death over the winter. But it looks like less and less that's coming to fruition, because sometimes talking about some sort of bad data point or sets of data points elucidates the problem again and causes overcorrection in some cases, which I think may have been what's at play there. And hopefully it is the case for my European friends, that it is good for you prices through the winter. But maybe it'll be the same kind of situation here where they're bailed out, Core Scientific. But the point basically being that this argues that it's possible miners will be forced to liquidate tranches of reserves of their Bitcoin that are held in the open market. So 78,400 Bitcoin early October. This is like an article that was written by Glassnode back in October 4th that was looking at the aggregate size of miner balances. Oh no, I'm sorry, October 3rd. And it's been a while since then. So, I mean, we saw even with Core Scientific, basically they had like 1,000 Bitcoin back on September 30th, and they were down to about 24 Bitcoin over the course of a month. So it's very likely that we have had price pressure from maybe miners selling throughout this entire period, and those balances dropping off and being bid up by, I don't know, institutional players, governments, and retail. I don't think retail is really in here in a big way, but I imagine like the OGs who do sell at the top and are better able to time things and have been sitting on cash might be looking for these opportunities. And it's just been the case that Bitcoin does appear to be somewhat bottoming out here, because we haven't seen the bottom fall out in the way that it had through the summer, and has been settling around $20,000 and actually even higher than like the $18,900 to $20,000 region that it was recently. It's now trading above that, so making some of the longer term indicators look pretty good. So more and more we perhaps are seeing confirmation that the bottom could be getting closer and confirmed, but that again isn't necessarily the case, as we haven't really broken to the upside substantially. Just some data there talking about just some thoughts that are going on. Ethereum did have record ETH short liquidations in this article put up on Cointelegraph 8 hours ago. In 2 days, $500 billion were wiped out. In position in 183,638 ETH one day and 161,960 ETH the other day, as maybe traders were way more positioned to the south side. They thought prices were going to be going down, and that has been causing all sorts of issues and short squeezes apparently for the last 2 consecutive days, although that seems to be flattening out somewhat since the price isn't really continuing higher. But it is very risky, of course, to try to short, and unfortunately that was what a lot of people were expecting. There is perhaps more room for upside coming in. Hi, brothers. He's waiting for my brother who's coming to visit, and he's very excited, Wallace, for the visit. Oh my God, or the visitor. He's not here. He's not. Oh, okay. I'm sorry. Go on. He's here already. Wallace knew before I did. But anyway, I didn't want to make this video too long because I did want to hang out with him for a bit. He's currently in law school at UCLA. He got in, and he barely has any time off anymore. The amount of work that he has in is insane. He's so exhausted, but obviously it'll be rewarding. But right now, I can barely see him and hang out with him. So I do look for those moments he came over. But yeah, let's go ahead and continue here. Apparently, core PCE data for inflation came in today, and it was not as hot as expected. That could be something that could mean that the Fed wouldn't have to hike as much. I think the dot plots that analysts are putting out there themselves are showing now that we're basically expecting next week on Wednesday, the Fed is going to come out basically for 2 days and announce how much they're going to hike rates on Wednesday. When that comes out, the consensus now is that it's going to be 75 basis points. And we do know that the Fed doesn't like to surprise the market very much. They pretty much go in line with what tends to be most expected. So that's probably what's going to be happening. But then after that, supposedly they're going to be now not being as hot. So only 50 basis points in December, and then 50 or maybe 25 basis points in January and February. And then March now seems to be the consensus for when they might reverse course and stop hiking altogether, if not reverse course, because they might break something at that point. You had BlackRock, for example, talking about some of that today, and I guess stoking the flames of fear that are out there, talking about a recession, and that going to be the main thing, right? Like, forget inflation. The problem is that people are going to be out of work and so on. Anyway, don't take all of this. Take all this with a grain of salt. Of course, things could change. We still have 2 jobs data reports to come out and 2 inflation reports to come out before the December report, so things could very likely change. Even if Fed Chairman Jerome Powell comes out on Wednesday and gives hints, which is what is expected, of slowing down the pace of rate hikes into the future, that very well could change. So I fully expect these next few months to be insanely volatile, and that could be very well the case for crypto as well. But crypto is trying to sniff out when the Fed will reverse course and then start pumping that party early. I don't think a lot of what we've seen recently has anything to do with that. But it will be a big driver of the narrative as we continue to go forward here. I did have a poll yesterday, and congrats to Cardano, I suppose. I'm trying to make my polls of the day on Twitter a little bit more consistent, but this was the one yesterday. Which of these is your preferred layer 1 network to hold for the next 10 years? I had up there, I had to pick, right? I couldn't go with everything. I know some people were suggesting other projects I could have put up. And next time I run this, I will try to include it. But I just had Solana, Cardano, Avalanche, and Ethereum up there. Ethereum was in the lead substantially for a while, like over 60%. And I don't know what happened when I stopped paying attention for the rest of the day. I can't, I have to take a break from crypto at some point. But Cardano suddenly shot up. It got up to 82% and won out here. So Cardano wins. And if Elon Musk has won out here, this wasn't bots. People are saying that now that Elon Musk has bought out Twitter, that the bots are pretty much gone from Twitter. I didn't find that to be the case. Like when I tweeted today, I had auto replies under my tweets almost instantly from certain bots. And so I don't think the bots are done just yet, but hopefully the platform does get better with Elon. He is a big subject that's going around right now because, again, a lot of the main crypto information and the quickest way it's disseminated is done through Twitter. So people are following this quite closely. He's someone who's been following Dogecoin, talked about buying Bitcoin, selling Bitcoin, accepting it in his company. So people are saying a Bitcoiner now owns Twitter. And I guess that totally could be a way to look at it. He tweeted out, "The bird is freed," when it had become official that he owned Twitter. He is now, well, so like I was confused. I'm like, why are people so excited about Elon owning Twitter? I really want to understand what is driving that excitement. And for the most part, people believe it's the bot issue. So he will be fixing the bot issue. Then it's censorship, right? Because you had like President Trump being deplatformed, Ye being deplatformed, and other accounts. I'm sure like his notification feed is probably getting swarmed. Like, hey, can you look into this account that was deplatformed? And that's probably a lot of what he's dealing with personally. So anyway, he says he doesn't really understand how the moderation works yet at Twitter, but he is creating a council in order to work on that. I know there's some pushback, like a council still having a select group of people who are deciding what gets to be said or not. That's still a problem. So my suggestion was they should make like a Twitter DAO, create a new governance token, airdrop everyone. I don't know, like on Reddit, have to make some sort of vault, right? Or some sort of wallet, and then airdrop folks, or maybe like an account has to have a certain age or something like that after they've weeded out the bots. Airdrop everyone, have everyone vote then on how policy could go in the future. But anyway, Facebook wanted to have a say as well, according to Watcher.guru. I couldn't really find a real legit source still, so again, something to take with a grain of salt. But apparently Meta offered to discuss that Twitter moderation with Elon Musk, which to me is just so laughable. As I had also tweeted earlier, like Facebook was a big problem for me when it came to censorship, since they had completely, without giving me a valid reason, deplatformed me from my Facebook, like my first Facebook page, right, that I had since high school. Lost all my pictures and everything. Eventually I started talking more about cryptos, trying to help create opportunities for folks. I made a page. It had over 100,000 people in it. That was deleted. All my moderators were banned, or admins were banned from Facebook as well. They deleted my Instagram shortly after. So super crippled by Mark Zuckerberg, and they would not even tell me why. So I would find it very troublesome if he was someone who was able to help influence things in Twitter's direction, or with Elon Musk. But it's unlikely to be the case, I would imagine. Hopefully it's not. Anyway, Twitter is apparently still, so people have been remarking, oh, wow, he's cleaned house. He's fired the CEO, Parag Agrawal. He's fired the CFO, Ned Segal. He's fired the Twitter's head of legal policy, Vijaya Gaddy. Wow, this is crazy. But actually, it's a pretty damn good deal for them, because they're owed about $200 million as they leave the company. And this is due to salary and health benefits that they're going to be receiving. It's stock that they had that's going to be automatically vested, so on and so forth. So I think they're going to be pretty happy to be leaving Twitter and having done their part to get that share of money. So I wouldn't feel too bad for them. I'm sure they're going to be all right. And if they really wanted other jobs, like they need to work, I would imagine they'd be able to get that. Anyway, according to Binance's CEO, CZ, he was being asked about a possible, or probe about a possible investment that Binance, one of the biggest crypto exchanges, had done into Twitter to help buy out with Elon Musk in order to buy Twitter. And it was confirmed by CZ, who heard from his intern that they did in fact wire Elon $500 million 2 days ago. So this was just confirmed yesterday, last night. And so this goes to show perhaps that we could have more integrations with blockchain, or at least through Binance with Twitter. Maybe Twitter has some sort of role here in advising the direction that Twitter goes with cryptocurrency. And I think this could be overall bullish for cryptocurrencies, depending what comes out of this. So this is going to be developing, but I think this is, again, something to be worth noting as well. Huobi Global has delisted their stablecoin HUSD. I'm not still entirely sure why they delisted it, but after they did that, or announced that they were going to be delisting it, it dropped off parity. It's supposed to be backed 1-for-1 by the dollar, so it's not some sort of issue like what happened with Luna Terra, but it was just a matter of when the delisting happened, it caused parity to drop below $1 down to 89 cents. Apparently, they're going to be auto-converting those HUSD stable coins into other stable coins, so just like Binance kind of did. So if you have an account on Huobi Global and you are holding these tokens, just be aware that might be changing right now and you don't want to miss that news. This is something that we're seeing more and more where there are too many stable coins, there's liquidity that's being spread way too thin, and we have more focusing of those order books on exchanges, for example, like Coinbase, which is combining, in a rather strange move, but I guess they have enough funds to do so or whatever. They are combining USDC and USD markets. They're also going to be getting rid of, I guess if you had missed that, their Coinbase Pro platform, which kind of sucks because I like that. And a lot of people are noting that Coinbase Advanced or whatever, where they just put everything on like one page, Coinbase just doesn't seem as professional or comprehensive as what you're getting through Coinbase Pro, but it is direction that they're choosing to go of simplifying things a little bit more. I think simplicity is good when it comes to attracting people, but when it comes to advanced trading, I can see why that would be an issue. I saw this on the cryptocurrency subreddit that I thought might be valuable to you guys. Apparently someone supposedly may have figured out how to mint unlimited Reddit NFTs. So somebody posted here, someone seems to have figured out how to mint an unlimited amount of the free avatars from Reddit. So if you had a certain Reddit account that might be a certain age, have a certain karma, you could have minted one of these avatars, and they were selling, some of them were selling, depending on the collection, for quite a bit there on OpenSea, and you could have basically made some free money, so it was worth claiming them. But anyway, apparently someone seems to have figured out how to mint an unlimited amount and sell them on OpenSea, and made close to 1 ETH in sales so far. That's this account, Rex Sizer here. And that it might not necessarily be the case, as others pointing out that they've just figured out some sort of great exploit. In fact, I doubt it's been some sort of exploit, because it's not really an insane amount that they're minting constantly. It looks like they're selling most of these between $8 and $15, as you can see there, and not like back to back, like 1 hour ago, 2 hours ago, so they sold like 5 of them within this hour period, and this has been going on for some time. However, so as others are pointing out, it's might not be necessarily the case that they've exploited something. I imagine that Reddit would have been quick to announce something if that were the case, but it could be the case that they're perhaps buying accounts outside of Reddit and who might not be aware that they're do these, or they just don't care about these avatars, and they're buying them for less than the price that it takes to sell these different, to mint and sell these things. So that seems like the most likely thing. So I just wanted to cover that. We'll see if that is some sort of more problematic issue, but I really don't think it's the case just yet. And also, this is going on right now, right before I went live. I think it might be fascinating to check out. So if you want something to watch afterwards, I would recommend checking out Bankless shows on YouTube. They're currently having Sam Bankman-Fried, who we've been talking about a lot. So you have Ryan, Sean Adams, and David Hoffman hosting Eric Voorhees and SBF. Eric Voorhees, who gave probably the best rebuttal to SBF's set of standards that he thought that the crypto industry should follow and self-regulate before the regulators came in here, and might even have been a roadmap for how regulators should approach the space and how exchanges should interact with DeFi and how DeFi should have KYC. Just kind of absolute nonsense in my opinion. And Eric was great at summing a lot of that up. So now they're having a head-on collision there on the Bankless show that might be worth checking out. So if you want something to do after you close out of here, I would recommend that. Anyway, I hope you've had a great week. There's plenty more, again, that I could not cover, as you can see there in the banner on top. But I hope you have enjoyed what I did collect for you, and I will try to continue to bring you valuable information as we go forward here. But I need your help as always. Keep sending recommendations and feedback. It's invaluable to me. And I hope you have a fantastic weekend. I hope it's incredible. I hope crypto treats you well. And I'll leave you with a quote of the day here by Neil Armstrong. Research is creating new knowledge. I thought that was a wise definition that I hadn't really thought of in that way before. And I hope you also find valuable. Take care, much love, and stay cryptic. Peace.